I want to take a look at Microsoft and I want to take a look at Amazon. One's been going up, one's been going down, and I want you to tell our viewers which one you think is more important to the market's next move overall and why.
I would say it would be Microsoft. And the reason I say that is they're a company that has been building and growing, and the consistency of where they are going, I think, is telling us a lot about the broader side of the market, a lot of the different clients that they've got, and the growth and the market share that they are stealing each and every quarter, Scott. When you look at where they are with Azure with 50% growth, when you look at the fundamental story of the company itself, I love Amazon. I think they're a great company. They do a lot of things right. Their e-commerce business is untouchable. And then you look at obviously the cloud with AWS, very important as well. But it had such a great run clearly through the pandemic, but the extension of the run through the pandemic that we are seeing with a stock like Microsoft has been just extraordinary. And I think that it's a company that, as we look at it, they continue to go with different verticals of where they are going and how they're making their money. Obviously, cloud is the primary focus, but that's not the only focus, and Satya Nadella knows it. So he's expanding that company into all kinds of different areas for more or bigger revenue. So I continually think that this is not only a great stock, but I think it's a great leader. We need this type of a stock, I think, to be one of the names and why we are near all-time highs. I know we had a week where we've pulled back, fairly significantly, but I think the reality is going forward, we look at a stock like Microsoft as one of the pillars, I think, of the market.
And Pete, as you always do, you put your money where your mouth is. You bought new Microsoft calls today.
I did. We continually have, obviously, option activity everywhere. But today, we had some monstrous buying in Microsoft. Again, even with the stock as it's breaking out and hit up towards the 305 levels, we had the 305 call buying. We had 17,000 calls bought for next Friday's expiration. They also bought, Scott, out to September of 2022. They were buying the 320 strike calls. That tells me that there are some smart money out there that doesn't think that this run is over just yet, and Microsoft's got a little bit more upside.
Rich Saperstein, it's good to see you again. It's been a while. I'd like to get your views on the market through this prism as well. And I think part of what we're trying to get at here is, Microsoft going up may be more important, and Pete certainly thinks so, because it's going to be hard to get a big downdraft in the market as we sit what some felt like was the precipice of that for much of this week. If Microsoft remains strong, if Apple remains strong, yeah, maybe you can withstand a little bit of weakness in Amazon, but you're not going to be able to withstand a more dramatic FANG rollover, right?
Yeah, I'm going to agree with Pete on all those great points. And it's borne out by what's happened in the last year with the market up 30% and Amazon is really flat. But I think we have to look at both of them as controlling roughly 60% of the cloud, where the cloud has a secular tailwind of big data, artificial intelligence. So they're both uniquely positioned. Now, where I look at it is they're taking two different paths, where Amazon, $60 billion of operating cash flow, they reinvested roughly $50 billion of that, okay? Whereas Microsoft, $77 billion, they reinvested in CapEx, $21 billion of it. So Microsoft has returned roughly $55 billion to shareholders, roughly 2.5% of market cap. So you have Microsoft returning capital to shareholders while they're growing, and you have Amazon plowing more money back into their business, back into CapEx. So they're pursuing two different courses, and that's why you see Amazon where, in 2018, that stock was flat for 20 months, starting in roughly September of 2018. So I think Amazon is episodic, where their CapEx investments start to add incrementally, whereas Microsoft keeps plowing along. I think they're both great names to own.
Bryn, you own Amazon, you own Microsoft, you own Apple. And look, maybe it raises the pressure, if you will, on those kinds of stocks that they have to continue to perform, or else you may get the 10% correction that some have been calling for. In a week where it felt like we might be on the cusp of something, the fact that Microsoft continues to hold up, that Apple was right around a new high, is that more important than the fact that Amazon hasn't traded all that well lately?
Well, I think with Amazon, you definitely have to have the factor of, Jeff Bezos stepping aside to have Andy Jassy come in. Now, similar to when Satya Nadella came into Microsoft, I think it was in 2014, Satya Nadella had started at Microsoft in the 90s. Well, Andy Jassy also started at Amazon in the 90s. That being said, having that big change at the helm of Amazon, I think definitely could be part of the reason. But I think to your point in terms of, the consistency going forward of the Apple, Microsoft, and Amazon, what I do know about these two names is they're going to continue to put up huge monster cash flow, huge earnings. The big question is ultimately, what is the market willing to pay for those earnings? I think if I had to look at the two independently, I feel there's more comfort around Microsoft, only because you still have that same CEO, that same story. That being said, Andy being there since the 90s, he started when this company was just a few people and is now at the helm. So I think they'll both do well long term. But I like Microsoft better just because I do like that big gaming aspect. Amazon has Twitch, but Microsoft on the gaming side is huge and continues to be a really nice contributor. So for that, I think I would lean more into Microsoft than Amazon.